Hello, trading is closed on May 13th, 2021. We always start with our disclaimer first, and we go over yesterday's call for the rally today, and then we have our prediction for tomorrow. So this is my trading plan for tomorrow, May 14th, 2021. I can be completely wrong, so all trades should be at your own risk. Please follow the rules of my channel. If you do find it helpful, please click on like and tell your friends to subscribe. I like helping people. We had this huge drop yesterday. We called for this low to hold for a rally. We had a target of 4106.34, and that worked. That printed. Now we had some calls today. This gave a few MEJT targets. It gave a sell signal. The sell just means there's a lower target. Target printed immediately. Also gave an ultimate sell. We got the minimum target, but this is more than the minimum. We don't have to get more. There was an optional higher target, and we certainly got the optional higher target too. When we got the higher target, it said it was false. We'd retrace to 4112.40. That's this white line. We did that, and we stopped there. So that's been satisfied, and we're at support. We have a wall into the close. Often that will gap up, overtake this high. We also dropped right to support, but not through it. Just remember, support doesn't have to hold. And if support breaks in this pattern, it could break in grand style. What isn't good about the pattern is we gapped up, hit a higher high, closed under all the highs. And frankly, that's not all that's wrong with today's action. All the negativity from today, and this is negative, could be invalidated if we gap and take this high out tomorrow, and I freely admit that's not impossible. But if we don't do it, I think it's big trouble. Here's our count that we've been showing. It's working so far, and I'm going to stick with it until we prove otherwise. We had this breakdown yesterday. We said typically it would retrace either to one of these blue lines or to the point at which the line broke. Well, the point at which the line broke is this black dashed line here, and that's pretty much where we stopped. So far, all we've done is the minimum recovery called for by my indicators. Doesn't mean we have to stop there, but if you stop right at the minimum, if you do, should be a lot lower prices coming. Well, here's our count. We had this wave C, and this is easy to count as A, and this is easy to count as B. And the question is, where does wave C end? Well, there's a few things you want to see. You want to see some kind of Fibonacci relationship between A and C. And if it's as negative as I think it is, you want to see it end within the prior fourth wave. So let's look at this gold Fibonacci grid. If that's A and that's B, you can see C at this point is equal to 61.8% of A. So it's one of the logical places to stop, and it's also within the fourth wave. If we go to 100%, it's still within the fourth wave. So these are too easy to see logical places for this wave to end. It doesn't mean it has to end here, but if it ends here, it's easier to see. Now, if it ends within the fourth wave, it's a bit ominous that you can take the high point of the fourth wave, the low point of the fourth wave, take the minimum retrace. I like to see 38.2, and that's right where we stopped. So we stopped from a Fibonacci and Elliott perspective at one of the worst possible places, and also from our trend line, because it did the minimum retrace I would expect, and so far at least, no more. Now, I don't know how we're going to open tomorrow, and if we keep on going up from this, there's a higher target. I don't have anything saying it's impossible. But if we stop here, and particularly if we gap down smartly under this low, that's very negative. Because if we gap under this low, it means this whole recovery didn't count. You gap under the lows of the recovery didn't count. And then we're still in this strong impulsive move down. And if that's the end of magenta B, you could get a magenta A, which is larger. You could get a magenta C, I should say, which is larger than magenta A, which was no slouch. We do have mixed signals for tomorrow. These are the calls for next week. Friday's pattern has the early high. We could still gap down. Typically, it's a rally day with a final hour high. Just remember, if it fails, it's a straight line drop. Despite today's strong rally, breadth actually deteriorated as measured by the BP-SPX, which is a bullish percentage of SPS stocks with bullish patterns. Actually, the breadth got worse. The implication is no matter how much we recover, this rally is going to fail. Technically, we still need to undercut yesterday's close by 1 cent. I don't think we're going to have to wait long for that. It is positive we still have the C-mini volume spike and the VIX Bollinger Band reversal buy signal. These indicate oversold conditions, and the wall into the close at least offers the possibility of gapping up, as it indicates an oversold condition fueled in large part by non-professional traders. But it's negative. We gapped up, hit a higher high, closed under all the intraday's highs. Today's rally met the minimum standards for a pullback. Bulls need to gap and promptly overtake today's high to continue the pace. Failure to do that, and especially if we open with a big gap down tomorrow, would indicate we could do no better than the minimum and put us in a crash scenario. Market crashes occur only from oversold conditions, and that's if we start off tomorrow by gapping under today's low, it would show today's rally was false and much lower prices should ensue. It might not even take that week of an open to make a crash possible. Now, please remember, just because you have the conditions for a crash, it doesn't mean you're going to have one. They're pretty rare events. But if we do start out with this big down move tomorrow, this is a type of a situation from which a crash is entirely possible. So if you're positive on this market, you want us to overtake this fast. And if we undercut this, the bottom is going to be pretty far down. Tomorrow has the early high, but if we gap down smartly, look out below, and that's today's call.